Welcome to Fresh Talk News Channel. Today, we delve into a major political and economic development in Mississippi. With a stroke of a pen and a few light-hearted jokes, the Build Up Mississippi Act, the largest total tax cut in the state's history, was officially signed into law on March 27. Amid picture-perfect weather and the stately backdrop of the governor's mansion, Republican Governor Tate Reeves, joined by lawmakers, lobbyists, friends, and the press, signed House Bill 1 into law. This income tax elimination bill, however, contained a crucial mistake: unintended typos that will accelerate the rate of income tax elimination, potentially shortening a process that was originally expected to take more than a decade. These typos became the latest twist in a complex negotiation between the House and Senate over tax cut strategies. The Senate initially proposed a cautious, gradual approach to phasing out the income tax, while the House pushed for a more aggressive timeline. Thanks to these typographical errors, the House secured the faster cuts it sought, and they weren't about to correct them. Governor Reeves embraced the legislation enthusiastically, hailing it as a historic turning point for the state. Today is a day that will be remembered, not just for the headline, not just for the politics, but for the profound generational change it represents, Reeves declared. It feels like it's been a long time coming, but after many, many years of hard work, we can all stand together and say that we have accomplished income tax elimination in the state of Mississippi. Let me say that again: Mississippi will no longer tax the work, the earnings, or the ambition of its people. Lieutenant Governor Delbert Hosemann took a more humorous approach in his remarks, joking about the bill's unintended errors. "Some of y'all were focused on a typo in the bill," Hosemann quipped. "I'd use the political analogy: he who has not had a typo, cast the first stone." Even with this new law, Mississippi is still phasing down income taxes from a previous 2022 cut. By fiscal year 2027, the income tax rate will stand at 4%. The newly signed legislation will lower that further to 3% by 2030. Then, starting in 2031, additional reductions will be triggered based on revenue growth, and that's where the typo fiasco comes into play. Future tax cuts were originally designed to be triggered by an 85% growth in state revenue over expenditures. However, the bill was mistakenly written to require only a 0.85% growth, meaning that even minimal increases in revenue would automatically trigger additional tax cuts. HB 1 also includes provisions beyond income tax reduction. It lowers the sales tax on groceries from 7% to 5%, increases the gasoline tax by 9 cents over 3 years to fund infrastructure projects, and introduces new hybrid public employee retirement benefits. Governor Reeves framed the tax overhaul as a victory for economic freedom and a long-term investment in Mississippi's future. The elimination of the income tax is not just a win for our economy, it's a win for freedom, a win for families, a win for the idea that Mississippi can lead, and that we will lead in the century to come, Reeves proclaimed. "I believe with all my heart that we will look back on this day as a turning point, a generational victory and a proud legacy we leave for those who come after us." Supporters of the bill argue that eliminating the income tax will make Mississippi more attractive for businesses, create jobs, and ensure that residents keep more of their hard-earned money. However, not everyone is convinced. Many state Democrats, as well as national economists and tax policy analysts, warn of potentially severe financial consequences. Neva Butkus, a senior tax analyst at the Institute on Taxation and Economic Policy, voiced concerns that the tax cuts, amounting to a net $1.9 billion reduction in state revenue, could leave Mississippi strapped for cash when funding essential government services. "I don't think Mississippi has to look very far to see the impact," Butkus said. Just last year, the SP downgraded the state's credit outlook, citing previous tax cuts as a contributing factor. Creditors and credit rating agencies were already concerned about Mississippi's ability to sustain a successful economy and pay its bills. Butkus also pointed to the timing of the bill, noting that national Republican leaders are pushing for massive federal budget cuts, including reductions in federal to state funding. Mississippi, which receives the second highest amount of federal support in the nation, behind only Louisiana, could see significant funding shortfalls if those cuts materialize. According to research from Butkus and ITP, the income tax elimination will provide only minimal savings for low-income Mississippians while shifting a larger financial burden onto them through higher sales and gasoline taxes. Our modeling shows that someone in the top 1%, a household making around $1.4 million a year in Mississippi, will receive an average tax cut of $41,000 once the income tax is fully eliminated, Butkus explained. Meanwhile, a household earning around $41,000 annually will see only a few $100s in tax savings. At the same time, the state will be draining its coffers and losing its ability to fund basic public services that the vast majority of Mississippians rely on. As the legislative session progressed, the Senate initially sought to implement a more gradual, cautious tax reduction plan, introducing amendments to HB 1 that would phase in cuts more slowly. Or at least, that was the intent. The typo in the final bill, reducing the threshold for revenue-based tax cuts from 85% to 0.85%, ensured that the House's faster-paced approach won out in the end. Now, lawmakers will have to contend with the financial implications of their own drafting mistake. What will the long-term effects of this tax overhaul be? Will Mississippi's economy thrive under lower taxes, or will the state face budgetary crises in the years ahead? Only time will tell. Thanks for watching Fresh Talk News channel. Don't forget to like and subscribe for more news and updates.